This video I will explain health insurance, low premium versus high coverage, what to choose. Many beginners buying health insurance get confused between low premium and high coverage. People often ask, should you buy a cheaper insurance plan or should you pay more and get higher protection? To answer this properly, you must first understand what these terms mean. What is premium? Premium is the amount you pay every year to keep your health insurance active. For example, suppose insurance plan yearly cost 12,000 rupees, then 12,000 rupees is your premium. You pay this amount every year to continue the policy. What is coverage? Coverage means the maximum amount the insurance company will pay during the medical treatment. This is also called sum insured. For example, suppose your health insurance coverage is 10 lakh. If hospitalization happens, insurance company may pay expenses up to 10 lakh according to the policy rules. What does low premium usually mean? A low premium usually means lower yearly payment, but often lower coverage or fewer benefits. Sometimes cheaper plans may include lower sum insured, more restrictions, smaller hospital network, higher co-payment, and limited features. What does high coverage usually mean? A high coverage plan usually means bigger medical protection, higher sum insured, better financial safety during emergencies. But premium may become higher. Now we will see the real life example. Imagine two people. Person 1 chooses premium 5,000 per year, coverage 2 lakh. Person 2 chooses premium 15,000 per year, coverage 10 lakh. Now imagine a surgery cost, which is 6 lakh. What happens? For person 1, insurance covers only 2 lakh. Remaining 4 lakh paid from personal savings. For person 2, insurance may cover most or all of the 6 lakh bill. This clearly shows why coverage matters. Why very cheap insurance can become risky. Many beginners choose insurance only by looking at the lowest premium. This can become dangerous because medical costs are increasing fast. One hospitalization may cost several lakhs. A very small coverage amount may not be enough during serious illness. Hospital costs are increasing. This is very important. Today, ICU charges, surgery cost, medicines, and hospital room charges are becoming expensive every year. Now we will see the real life example. In many cities, heart surgery may cost 4 to 8 lakh. Cancer treatment may cost even more. So choosing extremely low coverage may create financial problems later. Does higher premium always mean better? Not always. Some expensive plans may include extra features you may not need, luxury hospital room benefit, international treatment options. So higher premium alone does not automatically mean the plan is perfect. You must compare coverage, features, network hospitals, waiting periods, and claim process. Important balance. Affordable premium plus good coverage. For most families, the best choice is usually reasonable premium and good enough coverage, not the cheapest possible plan and unnecessarily expensive luxury plan. Simple rule for beginners. Many financial experts suggest choose higher coverage with the premium you can comfortably pay every year because insurance is for major emergencies. Big medical bills are the real danger. What happens if you stop paying premium? If premium is not paid, policy may become inactive. Insurance protection may stop. So always choose a premium amount you can continue paying long term. How much coverage is usually recommended? This depends on family size, city, age, medical history, and lifestyle. But many people today prefer for individual at least 5 to 10 lakh. For family 10 to 20 lakh if affordable, especially in large cities where medical costs are high. Important things to compare besides a premium. First one, network hospitals. Check whether good nearby hospitals are included. Second, cashless treatment. This helps avoid paying huge money immediately during emergencies. Third, waiting period. Some diseases are covered only after certain years. Fourth, claim settlement ratio. Shows how reliably the company pays claims. Fifth, co-payment. Some plans require you to pay part of the hospital expenses. Now we will see the real life full example. Imagine Ravi buys the cheapest insurance plan because the premium looks low. Plan details. Coverage is 2 lakh. Later, his father needs hospitalization. Total bill is 7 lakh. Insurance pays only 2 lakh. Remaining 5 lakh paid from family savings. Now imagine another person who choose 10 lakh coverage. That family faces much less financial stress during the same emergency. Which option is better for most people? For most people, choosing a slightly higher premium with better coverage is usually safer than choosing extremely cheap insurance because one serious medical emergency can destroy savings very quickly. Simple advice for beginners. Do not buy insurance only because premium is lowest. Instead, check coverage amount, hospital network, claim process, waiting periods, and overall protection. Insurance should protect your family properly during emergencies. Now we will see the summary. Low premium, cheaper yearly payment, but may provide smaller protection. High coverage, better medical protection, helps during expensive treatments. Premium may become higher. The best choice for most people is affordable premium and good enough coverage for real medical emergencies.